Mangalam, no better than you to explain what it means for JSW and what it actually means for the paint industry as well.
You know, we're speaking about the disruption in the capital market space and whether there is space for everyone here or not. There is definitely disruption in the paints industry that took place, and whether there is space for everyone else or not is something that we're discussing. A 9,000 crore deal that has happened, JSW Paints has gone ahead and acquired Akzo Nobel. So I'll just, first up tell you the industry, what the players are doing and what the prognosis for the industry is as well. So let's start with, JSW Paints acquiring Akzo Nobel at close to around 2,700 rupees per share for the promoter's stake. 3,417 rupees per share is what they've allowed for an open offer as well. But on Akzo Nobel, they're the fourth largest paint company in India. They're the makers of Dulux paints, and nearly 35% of their revenue comes in from decorative business as well. They have a high market share in the premium end of segment. Whereas JSW Paints, if you look at it, they've been in the market for over 6 years. FY24 is when they crossed that 2,000 crore revenue mark. FY25, they had a target of 3,000 crores, and FY26, 5,000 crores. All of this organically. Remember, 60% of their revenue comes in from intergroup business, so that's something we'll have to talk. If you look at the paint industry, the top two players have over 50% market share. Asian Paints last year did over 34,000 crores in terms of revenue. Berger, 11,500 crores. Kansai, 7,800 crores. Akzo Nobel stands in here. Add another 2,000 crores of JSW Paints, it becomes a 6,000 crore player on the whole. The paint industry worth nearly 80,000 crores right now. 65,000 crores is organized, expected to grow anywhere between 12 to 13%, with the market share of top two players being over 50%, and that's what the conglomerates are eyeing. What is it that helps in, the business to grow? Birla Opus launched last year itself. They have high single-digit market cap and market share rather, and 900 to 1,200 crore in terms of quarterly run rate. Can they continue this business or not? They have a stated target of 10,000 crores in terms of revenue and EBITDA break-even by year 3 of complete operations. What is it that the incumbents will need to do? Focus on distribution, brand, tinting machines, and capacity. Capacity, the least of them all. First 3 is most important. What everyone will be looking at, how the incumbents and disruptors expand, whether there would be margin contraction in the industry or not, and eventually valuation multiples. Are we likely to see another derating once this disruption comes by or not? All of that depends on what Akzo Nobel and JSW together do. We'll be tracking growth for JSW Paints along with Akzo Nobel, x their own group revenues. Secondly, how much more will they invest in capacity, branding and distribution? And thirdly, from a listed company standpoint, will they list JSW Paints business via reverse merger, or will there be an IPO for JSW Paints itself or not? Paint stocks have seen a correction of almost 30-35% from the peak. Asian Paints at some point was trading over 60 times, now at 45 times. Berger Paints 40 times. So there has been one leg of valuation multiple derating that has taken place. Will there be more or not? And that exactly is the question to Gautam. Gautam, the demand environment is improving. We're also seeing some sort of improvement when it comes to cost tailwinds. The companies have gone ahead and seen one round of competition. JSW and Akzo have been around, so it's not that competition is any old right now, any new